Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video. I'll be discussing the order flow that took place after the Powell's talk at Jackson Hole. And before we jump in, again, remember, if you enjoy learning from these videos and want to see more, be sure to hit the subscribe button, and be sure to leave a comment for me in the comments section, with your biggest takeaway. I love hearing your feedback. Even if you have a suggestion for another video, be sure to put that in there. And again, your support really goes a long way in helping me want to create more awesome videos just like this. So if you're getting value from my channel, want to see more, be sure to hit the subscribe button, and let's go jump into today's topic. Okay, so again, today was Jackson Hole meeting, and Powell said some comments that basically signal that the Fed is going to intend to keep raising rates this year. And honestly, everyone was sort of waiting to see what Powell had to say. That's why we had been in sort of quiet market mode until, he would say what he's going to say, right? And you can see we're basically a little sideways action. Since the cash open, basically we had hit that new high of 10.5, but we're trading basically between 10 and double low or 01. Then he starts talking, yapping. Market spikes up, comes off a bit, then goes up, makes new highs. And we sell off from our highs all the way down to lows, new lows, new lows. And then we get a nice little bounce up from the lows at 65.25, all the way back up into the 80s. And it was a pretty quick move that happened in about 10 minutes, okay? And sort of what I want to talk about is, some of the interesting order flow, because, a question had come up about what is passive traders? Some people that are newer to order flow don't understand the difference between passive traders and aggressive traders. Because when you have a buying imbalance, that is aggressive buying. If you have a selling imbalance, that is aggressive selling. But who are they selling to, or who are they buying from? They're buying from the passive traders. And the easiest way to explain it, right, is if you look on a trading dome, right, we're all familiar with the dome, right, you see the current bid, offer, right, it's a two-way auction. All the volume you see sitting on the bid, that is your resting liquidity. That is your passive buyers, people that are happy to buy it here at 17.75, 17.5, 17.25, 17. Just as you have passive sellers up here on the offer side, people that are working an offer at 18.5, at 18.75, right? 57 offered at 19, and so on. These are your passive buyers. These are your passive sellers. For a trade to happen, someone has to cross that bid offer line, right? Someone has to, either buy at the market or sell at the market, or if you're working a bid, you have to move your bid up from whatever price. If you're at, say you're down here at 44.18, you just want to get filled, you lift it up and you buy the current offer at 19.5. Just as if you're trying to sell it up here at 23, but we're trading 20.5 and you're like losing patience and you just want to get out of this trade, because you had bought earlier, you're trying to sell up there at 23. What you're going to do is you're going to become a aggressive seller. You're going to move it down from 23. Just get me out. You're going to either sell at the market and hit the bid, or you're going to move your offer price down from 23 down to 20.5. You're going to cross that bid offer line, because again, if you move it down to 20.75, you'll be a passive seller. You'll be sitting on the offer. You'll be behind whatever number of contracts is in front of you. You may get filled. You may not get filled. Okay. Basically, passive buyers, passive sellers are traders that are willing to let the market come to them, right? They're happy to provide liquidity to the market, but at the same time, they may not get filled, okay? So just, that's really the difference between someone that's passive and someone that's aggressive. Aggressive traders want to get filled. They will pay the market price or sell at the market price. Passive buyers want to buy at their predetermined price. Passive sellers want to sell at their predetermined price. It's a bit like, buying a car, right? You go to the car dealer. There's a sticker price up there, right? The new, the new Chevy Corvette, whatever they sell for now, I don't know, $100,000. But you're like, man, I ain't got $100,000. I'll bid $85,000. Okay, well, you're not going to buy it, right? Because the dealer's a passive seller at $100,000. He's fine because he'll know he'll get someone come in, pay him $100,000 for it, right? So he doesn't have to be aggressive. Now, if you do have the money for it and you're like, oh, I want this car, You know, I'm in love with it. I love the design, the color, everything. I want it. You're going to pay the offer. You're going to be the aggressive trader in that sense. You're going to go up and pay the offer. You're going to move your bid from 80,000 up to 100,000. Okay. And we go through that, you know, in our lives. You know, in grocery stores, everything is sort of a fixed price, you know, whatever the price is on the shelf. But if you go to like to a farmer's market or something, right? You know, I went to a vegetable market today near our house, you know, Smart Farm, where they're growing their own food, and they sell vegetables. And, you know, sometimes you could haggle, like, oh, you know, if it's late in the day, they don't want to be carrying it back, it might spoil. So they're going to lower the price, right? They're going to be more aggressive, right? Because they got supply, if it's at the end of the day, you know, they got supply that, you know, is going to go rotten. So they'll just keep lowering the price until it's all gone. All right. So that's a case of, you know, an aggressive seller, right? Someone with supply in the market. Now, today, it was quite interesting because after we hit this low, right, we started rallying. We got this nice sharp rally right up to 88, okay? And what was appearing in the order book, so remember, right, we had been, you know, trading, you know, much higher, sold off, trading down here at, making this new low here at, what was that, 79.5, made a new low here at 75 3/4, a new low 74.5, 72 1/4, 71, etc. down here till we get this low at 65. And then get the sharp rally. But in the order flow, and this is where looking at the actual volumes that take place, now this is not something you see all the time, but when you see it, you really want to pay attention to it. Because we're at the low of the day, and any bullish signs in the order flow, right, is something you want to pay attention to. And, you know, there were some nice bullish signs in the order flow, right? We got the aggressive buying coming in here. You got to see the stack buying imbalance coming in here. You see a bunch of zero prints. And as we start working our way back up, obviously we got the value area. But the most clear thing, the most obvious thing that came in off this low is the strong buying coming in here at 70 and at 70 1/4. Because, again, we had just been trading 70 for the last 1, 2, 3, 4, 5, 6, 7, 8 minutes. You know, this 8-minute span, over the last 10 minutes, we've been trading there back and forth around that area for about eight of those 10 minutes. And then a big buyer came in here, right? And let's just open up this chart a little bit more. You can see 1278, that's a strong bid. 917, that's a strong bid, right? This is a 1-minute E-mini chart. And, you know, this is what I talk about, you know, when you are trading a market, you know, decide on the chart you're going to look at, get familiar with it, know it inside out. So I know that anything over 1,000 at one price level is big. But what makes this more important, more special, is it's coming in an area as right after we made a low that we had just been trading at. So I know this is fresh, right? I know this is not 1,278 contracts that trade, you know, as we're going down, arresting liquidity like this 951. To me, this is resting liquidity. It's been orders sitting in the book for, you know, all session. But we trade through that, go lower, go lower, go lower, hit a low, market starts ticking up. All of a sudden, you got a big buyer coming into the market. Now, this big buyer, you know, he could be buying some pretty aggressively, but the fact that he sat on the bid to absorb whatever selling pressure there is, because we're down at the low, right? That's where a lot of people are going to sell, is down at the low, and he's there absorbing all that buying. 1,200 contracts. Even the one tick above, 900 contracts. You know, that's over 2,000 contracts just between 70 and 70 1/4. That's going to be a support level, right? 70, 70 1/4. Then we, you know, next bar opens up, you know, one tick below, goes a little bit lower, goes back up. I see another big bid coming in here, 25, 22. Look at that. 2,000 here, another 2,500 here. Okay, these are bids that are coming in. These are fresh bids. Again, these are not just people dropping offers in the book, you know, when the market's trading 10 handles away. This is bids coming in right now in the market. That's the importance of it, right? And I put extra importance on it when it's in an area that we've just been trading, because this is our low of the day. All of a sudden, someone's stepping up. I'm a buyer. I'll buy whatever you want to sell at this price. 3 ticks higher, 3 points higher. The buyer is still there. I'll buy whatever you got in. Another up here, 43.80. But again, the one up here is, again, it's obvious, 1100, 99, 1985, 700. But down here, this 25.22 sticks out like a sore thumb. This 1278, 917 stick out like a sore thumb. You should have been noticing this to get in this bar before the market puts in this bar that goes from 76 all the way up to 84. Right, and then obviously, once we got up there, right, look at these support levels. Right? I drew these lines here, 73.25, 70. These are going to be my support levels, right? And the market doesn't even come back anywhere near those levels. How do I know that this volume of 25.22 or this 12.78 is strong volume? Well, just by looking at the volumes that's going through earlier. Like I said, there was a 951 contracts here, 600, 500. These are double, triple, 5 times the amount of volume going through at that price. So I know it's a strong level. I know it's an important level that I want to focus on. Now, just get back talking about volumes a bit. Again, the 1985 is also important, but really, you want to have that sign closer to the low of the day rather than after you just rally 15 handles. I'd rather see this sign coming in here 5 handles off the low than 15 handles. But again, that's still strong. And then, market went up, and I just want to touch on this other volume up here, just to give you something where to come in. So there was a strong offer in the market, but where'd you go? Here, this 12.19. Here it is. I thought it came in on a red bar. So like this 12.19 here, people say, well, this 12.19, that's coming in at 43.90, okay? Is that important? Okay, well, it's important, right? But it's resting liquidity. This is coming in here, right? We haven't been trading there for, this is coming in at 10.28. We haven't been there since, 9.43. It's not like we were just trading here, right? 43.90, trading up at this bar, trading back and forth, and then see this come in. This is resting liquidity. And while it's important, I don't put it in as much importance in it as I did in this 25.22 and even this other volume down here, the 12.78, because I know this is just fresh buying coming in. This one, people are putting it in. We could have been trading in the 70s down here or even lower in the 60s, okay? And we trade it, we get through it, okay? And sort of the old concept of, if I'm going to treat this as resistance, okay, well, we're above resistance. We're trading above resistance, close above that level. Next bar trades down to that resistance level, then rejects it, comes back up. We're trading higher. Okay, so what do I got to be thinking now? Resistance becomes support. And what happens? Because whoever's selling here, right, unless these guys were the ones that bought it earlier down there in that other volume that went through the 2500 or the 1200, if this is a fresh short, someone looking for it to sort of sell off, it's not, so they got to probably scramble to try and cover it in here. Or some of these guys maybe try and scratch it to break even. That's how previous resistance becomes support, right? And then the market went back up, okay? So, over here, you got another big volume, 2670. But at this point, right, yeah, it's nice to see heavy volume coming in, in a move up. But really, the best part that you want to see it, the best happening that you want to see it, is right off the low of the day, when an area that you've just been trading, right here, right? Right here, right? Right off the low. I mean, we're literally 3 bars, 3rd bar off the low, 4th bar off the low after it's been made. I mean, those are the trades that, when you see them, you got to pay attention. Yes, you got to put the pieces together. That's why I make these videos. Again, it's not something you see often, but when you see that strong bids coming in off of the low of the day, act on it. Take advantage of it. Okay? So that wraps up today's video on sort of, passive and buyers and sellers, aggressive buyers and sellers, sort of the importance of where they're coming into the market. So again, if you find these tips helpful for your understanding of order flow, let me know, right? Let me know what you'd like me to discuss next by leaving a comment below. And again, if you haven't already subscribed to the channel, be sure to, right? So you don't miss any of my new videos that come out. So thanks for watching. Thanks for being a part of this community. Your support is appreciated. I'll see you in the next video.